Brent crude, a benchmark for nearly 80% of global crude oil trade, crossed $80 a barrel on Tuesday, and some agencies like Goldman Sachs are estimating that crude oil will hit $90 a barrel by the end of this year. This may have implications for India, which has a major import dependence for meeting its energy needs. For one, the government's fiscal maths will be tested by this oil price rally. A further surge would put pressure on it to cut taxes on petrol and diesel, which would hurt its revenue and spending. Secondly, as the rally pushes domestic petrol and diesel prices to new highs, consumers and industry will also be hurt. And thirdly, in the more immediate terms, there will be a clear impact on Indian stock markets too. On Thursday, the markets are expected to take cues from oil prices, besides global markets and how bond yields play out. Also, the derivative expiry for the September futures and options series is going to impact the trading sentiment on Thursday. So, coming back to oil, what is fueling this global surge in prices? And what's the road ahead? Up to what level may the prices rise? And what will be its impact? Puneet Wadhwa spoke to Dr. Kang Wu, Head of Global Demand and Asia Analytics, S&P Global Platts.
Hello, this is Puneet Wadhwa. Oil prices have steadily climbed over the past few weeks, with Brent crude oil crossing the $80 per barrel mark recently for the first time in 3 years. Research houses such as Goldman Sachs expect the Brent to hit $90 per barrel mark by the end of this year. So why is oil on the boil, and how are the demand and supply dynamics shaping up? To understand all this better, we have Dr. Kang Wu, Head of Global Demand and Asia Analytics at S&P Global Platts with us today. Welcome to the show, Dr. Wu.
Thank you for having me.
Oil prices have been rising, up nearly 6% in the last 1 week alone. What's fueling the rise, and what is the road ahead according to you?
The market has stayed elevated, and supply disruptions here and there in OPEC plus countries and non-OPEC. Demand has continued to be strong until at least August and continues. So that's the reason. Going forward, the market is still elevated. But just want to say that this kind of a tight balance will continue towards the end of the year, but may ease in the next quarter of 2022.
The demand, the prices, is the spike temporary according to you?
It is not temporary in the sense that it will come down very fast or something. But in terms of further going up, the fundamentals suggest that the market is actually will be balanced. But the balance is more likely in the fourth quarter of 2022. But for the last quarter of this year, it's still very tight. We do see like on monthly average, every month prices will be closer to the upper end of $70, like 75 to close to 80. But we're not talking about $80, $90 here.
What levels are we talking about then, let's say by December? They have been forecast for about $90 a barrel as well. Where does S&P Global Platts see Brent oil by, let's say, December?
I'm always going by monthly average, right? So in terms of the dated Brent, we are looking at $78 maybe on the upper end on a monthly basis, assuming all the supply delivers and demand goes as what we projected.
So which brings me to my next question, Dr. Wu. How do you see the oil demand shaping up? Is the recovery seen sustainable?
The demand recovery is on track, is sustainable as far as we see. The leader of the growth right now is Asia. After disappointing performance in Q2 and Q3, we do see there is a revival of Asia demand in Q4. And also another factor is, of course, the super high gas prices in Europe and JKM prices in Asia that are supporting some gas to oil switching.
Sure. Before we move to gas, Dr. Wu, I'd like to understand the demand scenario in China as well as India a little better.
Last quarter of this year is traditionally when China's demand is coming to a high level. So China also suffer from some demand issues in the Q2 and Q3. So we do see there's a growth in Q4, but that has kind of contaminated by this recent debt crisis and the loan issue and other issues. So there's slightly sort of a downside on China, but growth will still be positive in Q4 over Q3 in our review.
What about India? Can the slowdown in demand in China, can the demand for oil be incremental in India to cover up for the loss in China?
Well, there's a little bit lower growth in China, and India, on the other hand, is on a full speed to recover. Q3 is performing better than other countries. Q4 will be continuing to recover the loss, during the Q2 and some of the other years. India is a big supporting factors, along with Southeast Asia, for that matter, and Northeast Asia for the last quarter of this year.
So how do you see the OPEC Plus reacting to the recent developments in terms of the rise in prices? Do you see the OPEC Plus members opening their taps a little bit to cool off the prices? Yeah, very good question. There are several factors in the OPEC Plus, the quota increase. That's the first issue to deal with. They are on track to increase their to reduce their quota, the reduction of production, even increase the production a little bit, as we see it in October in the next forthcoming meeting. Of course, return of Iran is become unlikely this year. It's maybe next year, fourth quarter. So the impact for prices this year, Iran is out. And then you have some technical issues here and there in OPEC Plus countries, Nigeria, Angola. However, it happened already. That's why we see high prices today. So going forward, they are going to gradually improve. Gulf of Mexico is another non-OPEC issue, right? It's causing production interruptions, but that will gradually improve. Maybe full restoration of production in Gulf of Mexico in the next quarter of 2022. Okay, which brings me to my last question, Dr. Wu. On gas prices, what is the road ahead? We've already seen a spike in Europe over the past a few sessions. What is the road ahead for gas prices now? Indeed, on a daily basis, we are really super high today. We continue to see that seasonally for the winter, JKM and TTF prices will stay high. We currently look at around the current levels. We talk about maybe $27, $28, $29, or even $30 on average. That's for the whole season, right? From November to January. So that is our view before the prices drop, by quite a bit, in the summer, in the shoulder months of next year. But before that happens, there is quite a bit of high price time that we have to deal with. Of course, that happened to give some positive sort of support to oil demand in terms of power generation in selected countries, refinery use and industrial use of expensive gas that can be switchable to oil. Okay. Thanks, Dr. Wu. That's all we have time for today. Thank you for joining in. Thank you very much for your time.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.